Buying a home isn't the only place you feel inflation. Sometimes you feel it first thing in the morning, in the price of your coffee. Think about it. Just a few years ago, a small latte at your local cafe might have cost you $3. Now, it's $5, maybe $6, depending on where you live. That's not just a few cents here and there. That's a massive jump. And it raises a big question. Why is your morning cup suddenly so expensive? Today, we're breaking down the economics of coffee, how global inflation, supply chains, and even central banks affect the price of something as simple as your daily brew. And in the process, we'll see why inflation is never just a number on a chart. It's a story that reaches all the way from Brazilian farms to the wallet in your pocket. This is This Week in Finance, and we're going to explain coffee inflation in plain English. Let's start with the basics. Coffee is one of the most traded commodities in the world. In fact, it's second only to oil as a global export by value. Every single day, millions of people around the world consume more than 2 billion cups of coffee. From New York to Nairobi, from São Paulo to Shanghai, coffee is everywhere. But what most people don't see is just how complex the coffee supply chain is. Coffee doesn't grow in New Jersey or in London. It grows in the tropics, places like Brazil, Colombia, Ethiopia, and Vietnam. These are the world's coffee powerhouses. Now, when you're drinking a cappuccino in Los Angeles, the beans in your cup may have been harvested months ago on a hillside in Colombia. From there, they were transported by truck to a port, loaded onto a container ship, crossed the ocean, arrived at a US port, got processed by a roaster, and finally shipped to your cafe. That's thousands of miles, multiple middlemen, and countless costs, all before you take your first sip. And here's where inflation sneaks in. Every single step of that journey has gotten more expensive over the past few years. Let's break it down. Step 1. Farming. Coffee farmers have been hit by higher costs for fertilizer, labor, and energy. Take fertilizer, for example. Prices spiked after the war in Ukraine, disrupted global supplies of natural gas, which is a key ingredient in fertilizer production. That means farmers in Brazil, who rely on fertilizer to grow coffee plants, suddenly had to pay more. And when farmers pay more, the price of beans goes up. Step 2. Shipping. Getting coffee beans from farms to roasters means using trucks and ships. But during the pandemic, global shipping costs exploded. Container rates surged by as much as 500% at one point. Even though those costs have come down somewhat, they're still higher than before 2020. Add in higher fuel costs, and transporting beans is pricier than ever. Step 3. Roasting and processing. Roasters themselves have to deal with higher energy bills because roasting coffee is an energy-intensive process. In Europe especially, where energy prices spiked after the Ukraine war, roasting companies saw their costs skyrocket. Step 4. Retail. Finally, when that coffee reaches your cafe or grocery store, there's rent, wages, electricity, and taxes to consider. And here's the kicker. Wages have risen across many service sectors. That's good news for workers, but it means higher labor costs for coffee shops, and those costs often get passed on to customers. So when you add it all up, higher farming costs, higher shipping costs, higher roasting costs, and higher retail costs, you start to see why that latte is suddenly $5 instead of $3. But there's another layer to this: the financial markets. Coffee isn't just a drink. It's a commodity that's actively traded on global exchanges. Investors buy and sell coffee futures contracts, betting on the price months into the future. And here's the important part. Coffee prices tend to move with global economic trends. For example, when inflation is high and interest rates rise, the US dollar often gets stronger. And because coffee is priced in dollars on international markets, a stronger dollar makes coffee more expensive for buyers in other currencies. That can push prices higher globally. At the same time, weather plays a huge role. Coffee crops are incredibly sensitive to climate. In 2021, Brazil, the world's largest coffee producer, was hit by a brutal frost that damaged millions of coffee trees. Overnight, global coffee prices shot up. Farmers couldn't produce enough beans. Traders panicked, and buyers had to pay more. Even 2 years later, that supply shock still ripples through the market. Now, let's bring it back to you, the consumer. If you're just grabbing a cup of coffee on your way to work, you might not care about fertilizer prices in Brazil or shipping costs out of Vietnam. But here's why it matters. Coffee is a perfect example of how global inflation shows up in everyday life. When economists talk about inflation, they often talk about categories like core inflation or consumer price index. That can sound abstract, But when your favorite cafe quietly raises prices from $4.50 to $5.25, you feel it. You notice it. You might grumble about it. And multiplied across millions of people, that's how inflation affects behavior. Some consumers cut back. Maybe instead of buying a latte every day, you only get 1-3 times a week. Others switch to cheaper alternatives, like brewing coffee at home, and some just swallow the cost because coffee feels non-negotiable. The point is, inflation changes habits, and when habits change, businesses and entire industries adjust. That's why central banks, like the Federal Reserve, pay so much attention to inflation expectation. If people start assuming that prices will always rise, they act differently, and that can actually make inflation worse. So, what happens next? There are 3 big possibilities for coffee prices over the next year. Scenario 1, easing inflation. If global inflation continues to cool, energy prices stabilize, and shipping costs normalize, coffee prices could level off. That doesn't mean your latte will get cheaper overnight, but it could stop rising so fast. Scenario 2, more supply shocks. If another frost hits Brazil, or if extreme weather events disrupt harvests in Vietnam or Ethiopia, we could see another spike. Climate change is making these events more likely, and coffee is one of the crops most at risk. Scenario 3, sticky costs. Even if global conditions improve, some of the higher costs, like wages and rents for cafes, may stick around. That means the baseline price of your coffee may never return to pre-2020 levels. In other words, your $3 latte might be gone for good. Here's the bigger takeaway. Inflation isn't just about charts, bonds, or central banks. It's about daily life. It's about the price you pay for gas, groceries, rent, and yes, your morning coffee. When you zoom out, coffee becomes a kind of economic symbol. It shows how global events, war in Europe, interest rate hikes in Washington, storms in Brazil, can all converge in something as ordinary as a cup of coffee. So next time you're sipping your latte, remember, you're not just drinking coffee. You're drinking global finance in liquid form. This has been This Week in Finance. If you found this helpful, don't forget to like, share, and subscribe. And tell me in the comments, do you think coffee prices will keep climbing? Or are we finally reaching a point where inflation cools?